Welcome. Today, we're doing a professional hedge fund market breakdown of gold, or XAUUSD. In this explainer, we're going to analyze price action purely through the precise lens of smart money concepts and institutional order flow. So I'm going to ask that you leave that retail trading emotion at the door. We're going to systematically decode the higher time frame bias, locate our intraday liquidity targets, and map out a highly probable execution plan.
Let's start with this core institutional fact. Gold is approaching a major liquidity zone, and smart money may already be positioning ahead of the next expansion move. Look, in the institutional realm, price doesn't just move by accident, it's engineered. It's systematically designed to seek out areas of high liquidity, basically sweeping retail stops before initiating those true macro expansions.
Now, our focus today is strictly on the ICT methodology. We're relying on raw market structure, order blocks, and liquidity engineering to form our bias. And just a quick note, if you want to follow future trading opportunities and detailed market breakdowns like this one, you can go ahead and open a trading account with FXTM using the link pin right down in the comments. Okay, here's our top-down briefing. We'll cover the macro context and fundamentals, higher time frame market structure, intraday liquidity and targets, our institutional smart money setup, and finally, trade execution and invalidation.
Section 1. Macro context and fundamentals. We need to understand the geopolitical environment, not to guess the market's direction, but to see exactly what smart money is using to generate volatility. Right now, we've got some serious catalysts on the board. We're seeing heightened tensions in the Middle East with reports of intercepted retaliatory strikes involving the US and Iran across Bahrain, Jordan, and Kuwait. On top of that, there are conflicting reports regarding the Strait of Hormuz closing to commercial shipping. Domestically, US May CPI just hit 4.2% year-over-year. As institutional analysts, we look at these events completely objectively. They're just raw fuel. They provide the necessary panic and volume required for liquidity engineering.
And timing is absolutely everything here. Take a look at this high-impact volatility cluster scheduled for June 11th. We've got the EUR refinancing rate at 7:15 p.m., USD Core PPI at 7:30 p.m., and the ECB press conference at 7:45 p.m. server time. This heavy news cluster drops right at the opening of the New York kill zone, which is the highest volume window of the entire day. Make no mistake, this is our prime manipulation window.
What's really fascinating about this specific pre-news environment is exactly how institutional order flow utilizes it. These scheduled data points act as a catalyst. They're used to aggressively manipulate price upward into premium arrays, triggering early retail shorts and breakout traders, before accelerating downward into their true intended targets.
Section 2. Higher time frame market structure.
Shifting from those macro catalysts over to our technical framework, it's clear the daily structure is heavily bearish. Notice this aggressive downward drive and the really clean market structure break, or MSB, right below that previous major swing low at 4102.10. This confirms that price has officially shifted into a macro distribution phase. It's aggressively targeting the external sell-side liquidity, resting way down at 3920.00.
So the crucial takeaway here is the institutional draw on price. Sellers are in absolute control of the order flow. After sweeping the historical buy-side liquidity up at the highs, smart money went ahead and broke structural lows. This effectively converted previous bullish demand zones into bearish breaker blocks, driving price right toward those deep discount liquidity pools.
Dropping down to the 4-hour, or H4 time frame, we're seeing consecutive structural shifts lower. This continuous bearish order flow, respecting mitigation and breaker blocks every step of the way, really validates the dominant footprint of institutional selling pressure. Every minor bullish attempt is just swiftly met with heavy distribution. Now, before we drop into the lower time frames, let's quickly define the fair value gap, or FVG. An FVG is simply an inefficiency in price delivery. It represents a high probability institutional target for a premium rebalance. Currently, there's a critical H4 bearish FVG resting directly above current price action, sitting between 4888.80 and 4111.90. This open gap is basically a massive magnet for price right now.
Section 3. Intraday liquidity and targets. Let's narrow our scope down to the 1-hour time frame so we can see exactly where retail traders are currently trapped. We have internal buy-side liquidity resting right above recent minor highs at 4101.30. On the flip side, our ultimate external sell-side liquidity target sits below the current dealing range at 4036.90.
The big question is, which pool are the institutions going to raid first?
Well, that brings us to the concept of the Judas swing. This is a manipulative, pre-news price movement engineered specifically to sweep retail stops. Here's a somewhat surprising fact. Retail stop losses actually fund over 80% of institutional entries in these zones. So the H1 bearish order flow needs a temporary upward retracement to collect that internal buy-side liquidity, filling that H4 gap we just talked about, before reversing lower to attack the external sell-side liquidity.
Section 4. Institutional smart money setup.
Culminating our top-down analysis into an exact trade execution model, I need to state this firmly. There is absolutely no valid trade right now. Let me repeat that. No trade right now. Price is currently in a deep discount retracement leg. If we want to execute a high probability short, we have to practice discipline and wait. We are waiting for price to trade up into our premium array, and critically, we need to see a market structure shift on the M15 with clear displacement during the New York kill zone.
Let's break down the exact prop firm trading plan based on scenario 1, our sell setup. The direction is short. Our entry zone is within the premium array from 4085.00 to 4101.00. We'll set our stop loss firmly at 4106.50, which places it just above the M15 structural high. Take profit 1 is going to target internal liquidity at 4063.90, and take profit 2 targets the external H1 sell-side liquidity down at 4036.90. This gives us a highly asymmetrical risk-to-reward ratio of about 1 to 4.5. The institutional reasoning is straightforward. Allow the news to engineer the liquidity sweep, wait for the displacement confirmation, and then execute. As for scenario 2, a buy setup, well, given the heavy macro distribution we're seeing, buying is strictly counter-trend and honestly not advised unless we see a daily structural shift, which I'll define for you in just a second.
Section 5. Trade execution and invalidation.
Transitioning to our management rules, remember, we operate entirely on probabilities here. Based on current order flow, there's an 80% probability of a bearish expansion following an M15 liquidity sweep. There's only a 20% probability of a complex, bullish retracement that deeply fills the H4 FVG. But keep in mind, executing at that premium entry zone relies entirely on seeing that M15 bearish confirmation trigger print first. No trigger, no trade. It's really that simple.
We also absolutely have to define our hard invalidation level. If a daily candle closes cleanly above 4112.00, our bearish bias is entirely invalidated. A break above that level destroys the bearish breaker block, completely fills the structural gap, and tells us that smart money is shifting back into a complex, higher time frame accumulation structure. If that happens, we simply step aside.
Look, institutional analysis requires patience, it requires precision, and you have to be willing to let the market tip its hand before you act. If you want more institutional-style market analysis using smart money concepts and the ICT methodology, make sure to subscribe to the channel. And again, to follow future trading opportunities and detailed market breakdowns, you can open your trading account with FXTM using the link down in the pinned comment. I'm going to leave you with this final thought as we approach the New York session. When the volatility hits, will you wait patiently for smart money confirmation, or will your impatience cause you to become the very liquidity they are hunting? Execute with discipline.